how to get out of paying PMI. Let's talk about getting an appraisal to get your PMI removed. I'm Craig Power with Power Realty Advisors, serving Greater Boston and the South Shore. Subscribe to the channel, trying to answer a lot of niche personal finance questions here. PMI is evil. It is the enemy. It does not benefit you, the homeowner, in any way. PMI stands for private mortgage insurance. And of course, it does not insure you. It insures your mortgage lender against default. Really, it's just another hand in your pocket. Our goal here is to help homeowners. So starting at the top, right? This strategy, an appraisal to get out of PMI, works with conventional loans. With the conventional loan, your PMI will eventually fall off when you reach the scheduled threshold between 20-22%. We know that it would be removed on schedule on its own, but we want to bump that timeline up. And it's about proving you've reached a certain loan to value, LTV, if you've heard the abbreviation. On a conventional loan, if you can prove you're at 80% loan to value, you can get rid of PMI. A lot of my clients have used FHA loans and they could not use this strategy. Their FHA mortgage insurance premium lasts the life of the loan. Therefore, they would need to do a full refinance into a conventional loan to ever get out of that insurance payment. That's a huge difference. That's one of the biggest negatives to FHA loans. So back on the conventional loan, what we're gonna do is we're going to inform the lender we wanna get a reappraisal. We're gonna hire an independent appraiser to come out and do the little things to nail this. Document any improvements you've done to the property, get the front ready, give it some curb appeal, deep clean and stage the place, get it looking nice. Get the appraiser out there, get your new appraised value from them, and we're gonna send it back to the lender and say, screw you guys, my mortgage payment is lower from now on. As I said, the goal is 80% loan to value. So let me give you an example of this mechanism. Let's say you bought the house a few years ago, conventional loan, you bought the house for $500,000. That was its market value. You bought it with 5% down, $25,000. So right off the bat, you have 5% equity, or you're at 95% loan to value, right? The house is worth $500,000 and the principal you owe is $475,000. The whole payment structure is based on this moment in time. Now, in this hypothetical, let's say years have gone by, maybe the principal amount you owe is down to $440,000, right? According to that original loan, which is based on a property value of $500,000, that's still 88% loan to value. In the lender's eyes, you have 12% equity. But your home's market value, we know it's now closer to $550,000, right? Maybe that's due to renovations you did, or maybe just because the market's up over that time. Let's get an appraisal to prove it, because if you only owe $440,000 on a $550K property, that's 80% loan to value. If your home's appraisal comes back at $550,000 or higher, you're good. You can show the lender you've reached that 80% loan to value threshold, or a lot of the time you can look at it in reverse, right? You've reached the 20% equity threshold. In either case, right, PMI should be removed. You want to communicate with the lender ahead of time because they may have certain rules or processes to follow, specific appraisers to use, and then there are admittedly caveats based on time of ownership. Have you owned the house for 2 years? Have you owned the house for 5 years? Are you at 80% LTV? Are you at 75% LTV? And you may be watching this video in a time, who knows, where rules have changed. So communicate with them directly. A side note on the FHA refinance process, you probably won't hear about that many of these until rates drop back down. Because if you bought a house in 2021, your effective rate is probably pretty nice, even on an FHA loan, compared to what the market is offering today with these 7% interest rates, right? So you're probably gonna wanna bide your time, get your finances in order, get your credit in order, and then jump on the refinance opportunity when rates drop down at some future date. Thanks for watching, subscribe to the channel, and as I said, trying to cover a lot of niche personal finance questions here, so don't hesitate to reach out at any time. You can email me at craig@powerrealtyboston.com, and thank you again for the support.